Good afternoon, everyone. Hey guys, this is Bruce Marshall from Simpler Trading with the nightly video update for Wednesday, April the 26th. So happy Wednesday, happy hump day. Hope everybody's doing great, having a great week of trading. Been a little tricky this week. Had a lot of kind of back and forth and mostly down on a couple of different issues, but we'll get in that in just a second. First of all, let's look at the chart here. I have got the NASDAQ up right here. I've got the Russell here, and this is the ES over here. The black session or section is the cash session of the trading day. This is a futures, and the light gray is the overnight session. So as you can see today, we kind of came out of the gate just with a flop, came down to our Voodoo snow line, that white line down there, and then started ripping higher. Let me move this, and I thought, at that point, of course, we're looking at charts, we're looking at levels, and we thought, well, all we've got to do, there's the overnight high, we'll go up to that, at least that point, most likely. There is a Voodoo skyline right there, but we take that out and we can make a run up here, and that'd be great to regain some momentum that we have lost over the last couple of days. And instead we turned and just basically fell all day. We had one little spurt higher there at the end as we going to the closing bell. After the bell, and I guess we never know what those kind of zigzag moves are, if it's algorithm or what making those moves. But we have a lot of earnings after the close today, and they're still coming out, and a lot more in the morning, that kind of thing. Tomorrow we have Amazon after the close. That will be a big one, and then a lot of data points coming out as well. So kind of hard to say what's going to go on here. Very, very hard, in fact. So let me do this. Put this on my regular. Let me find my regular Voodoo lines. And so our Voodoo lines are based on Elliott wave theory. If you ever know what or ever look at Elliott wave, I use it a lot. I use Fibonacci levels primarily with the Elliott wave kind of backup, and when they're saying the same thing, that's a really, really good indication. So this red line here is our Voodoo fire line. Now that's the strongest of the support or resistance levels. Basically, when we're on this side, this acts as support, and you can see it hit there 3 times. Got close here, came down, hit, it did breach through it right there, but came right back up, and today we just went right through it. Not good. So when you're on the downside, when you're below this acts as resistance. So we'll see. I mean, there's a whole lot of other external factors going on with the market right now, with earnings and guidance, and we got Fed meeting next week, and what's going on there, and so again, very, very difficult to make heads or tails out of it. But in the on a day-by-day basis, we have this straight down, straight up, straight up, straight down, straight up, straight down. Just that's pretty nerve-wracking to trade. And we're trading it at here at Simpler Trading, and and we're doing fine. It's tougher than normal, because there's a lot more trade management. There's a lot more quick decisions as far as get in, get out, or you're going the wrong way. You're short, you need to be long, or you're long, you need to be short, that kind of thing, because that's been happening a lot on an intraday basis. And I know a lot of people aren't used to trading that that way or that style, but it's the kind of market we're in now. Hopefully after next week on May the 3rd, right there, we've got Fed meeting. They will most likely do 25 basis points, and depending on the language, we might get big upside or big downside depending on the language. That being, we're getting close to our goal, our target goal, etc. Or on the other side, in that case, we're gonna rip higher, or we don't see inflation easing off. We see the need to keep raising rates until further notice, that thing, and then boom, we're going down. or somewhere in between, and they'll try to make it as easy as possible. But I think the market's already baking in about 25 basis point rate hike, which is expected. That's kind of normal. But I do think we're getting much closer to the end of the tightening cycle, which means the market is always forward looking. So should be a good thing for the market. The key is how the language around what Powell says and how they frame it is, are we coming to an end of this or not? So between now and then, let me go back here. Ooh, that was June. Sorry, May the 3rd. Sorry. We'll have, again, we've got the biggies. We've got Amazon tomorrow after the close. We've got Apple next Thursday after the close, and a lot of other earnings kind of sprinkled in there with that. But let's go out here to a longer term time frame, and again, you can see, if you look at this, we have been this Voodoo fire line, the red line here. Now this line has been there. This is a 1 year chart. The interesting thing about this line, that line has been on this chart and projected forward a long time, maybe even a year prior to this chart. It's been there for a long time. They're pretty, they don't move much. So as you can see, we've come down. There's a whole lot of touching this back and forth. We've gone through it, kind of failed right there at it, chop, came through it a couple times, came through it, came to it, failed, got a little bit above it, chop, and then we're here. So we've revisited this line many times in this last, this is a trailing 1 year. Also you see our skyline up here where we failed from quite a few times. Do we pop up here and fail, or do we come back down here and kind of retest some of these levels? Who knows? And it will be, it'll be determined by what's going on with earnings and so forth. Debt ceiling, they're voting on that today. So lot to watch out for. Unfortunately, the only way to really handle this market right now is to trade it, very short time frames, be very nimble, and tight stops, and really limit your risk as far as how much exposure you have and all that kind of stuff. And I've been saying that for, it feels like, months and months and months. And that's the way we have to continue to do it. Again, we're still making money in the market. It is good for trading, but even if you're a trader, this is a much more nimble market than we've had in a long time. I've been trading 34 years, and I can't really remember consistently erratic market like this ever. But again, keep your eye on, forward looking. I think we'll be coming out of this pretty soon. I keep hearing people saying that we might even start getting rate cuts later in the year this year. The market goes higher if that happens, that kind of thing. So I don't know. We'll see. And we will wait and see what the Fed has to say next week. Try to catch the video next week. It's always on a Wednesday. I always do videos on Wednesday. So next Wednesday in the video, we will have our answer as far as what the Fed's going to do and all that kind of stuff. So between now and then, be nimble. Tight stops are really size appropriately for your account size, and come join us, of course, at Simpler Trading. Come in the main room. We've got a lot of great traders in there that can help you. I have a room in there as well called the Bias Room. We do trades all the time in there, so come and join us and let us know if we can help. So thanks for the time, and I hope to see you guys in the trading room. And if not, I will see you or talk to you next week after the Fed, and we'll see what we can do. Thanks. I appreciate it. Take care.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me